The massive adoption of electric vehicles has significantly improved the roads today. With this, different electric vehicle companies are continuously striving to be one of the best producers and manufacturers of EVs in the market. Hey everyone, and welcome back to Everything Tesla Stock. Despite the heavy competition in the industry, Tesla is said to be the king of the EV industry, and even at this time, the company is still entitled as king. Why is that? Well, it's simple. Tesla is one of a kind when it comes to net profit. There is no one close to the profit margin of this tech titan in the entire automotive industry. As for why Tesla is still on top of the competition, we're just about to find out. But before we start, if you like this type of content, don't forget to like and subscribe and ring that bell notification button to stay up to date on everything going on with Tesla. Looking statistically, it's clear to see that Tesla has dominated the EV industry in the US for years. The company's been continuously increasing the EV production outputs, while also other electric car makers are still on the run on compliance vehicles and buildings. In 2020, it was reported that Tesla holds 79% of registered new electric vehicles in the United States. From a 2021 report, the company accounted for 69.95% of the EV market share all over the country. And for the first half of 2022, it still managed to acquire 68% of battery electric vehicles in the US. This shows just how fast Tesla vehicles have aced the roads, which may mean that the US EV market primarily relies on Tesla. Tesla is still on top of the competition because of the extraordinary manufacturing efficiency of the company. This is something that most Tesla enthusiasts are going to agree with. As is well known, supply chain disruptions and rising costs are some of the factors that have affected Tesla's production performance. But despite these headwinds, Tesla has posted an operating margin of 19.2% for the first quarter of the year, a significant uprise from the company's 14.7% operating margin from last year's fourth quarter. Now, there are still multiple factors that continuously affect the efficiency of the EV company in terms of production. Battery cost is a big one. According to CAN-ELA, Tesla pays 10% less to build battery packs compared to its closest competitors in the industry. But even at this rate, the automaker still incurs huge costs on its batteries. Technically, battery packs are the most expensive part of building an electric car, but with Tesla's significant cost advantage, it becomes evident that they are far ahead of others in terms of competition, and CAN says that this advantage will still last throughout the end of the decade. Now you may ask, what boosts Tesla's manufacturing efficiency? The answers are, its highly automated factories, pricing power, and rushing vehicle production. All of these factors have all contributed majorly to the incredible financial results of the company. Over the last year, Tesla's revenue soared to about $62.2 billion, up by 73%, and its free cash flow insanely rose by 118%, reaching $6.9 billion. Most of Tesla's plans are potential catalysts that are going to help to maintain the company's position in the industry. Projects such as the launch of the highly anticipated Cybertruck, which will likely hold next year, and the ramp-up of car production at its Berlin and Texas gigafactories are going to see Tesla's valuation soaring in the coming years. Tesla captured an industry-leading 14.4% market share in electric vehicle sales last year, and it demonstrated a continuous decline in the company's market share. Also, the automaker's operating margin presents a cost advantage in new and advanced technologies like the 4680 battery cell. With continuous innovation, Tesla can potentially take the roads to the next level, and by extension, increase its profitability. Tesla plans to build self-driving cars in the next few years. The car company is planning to launch an autonomous ride-hailing service that will be one of the best vehicle systems on the road someday. Its autopilot hardware incorporated 8 external cameras that mainly crowdsource driving data to train neural networks. In 2019, there was a debut for a custom semiconductor that would run the FSD software in Tesla cars. In one of Tesla's earnings calls, Musk stated that he believes that the FSD platform would probably go beyond the human driver by year end. He announced plans for Tesla's robotaxi fleet, the vehicle which will demonstrate autonomy and low-cost transportation. Tesla announced that it's expecting to reach the volume production of robotaxi by 2024, and is one step closer to an autonomous ride-hailing service, which the automaker is aiming for. In relation to this, asset manager ARK Invest believes that Tesla's autonomous ride-hailing services can generate $2 trillion in the company's annual profits by 2030 if it does become successful. This will surely put Tesla on top of the market opportunity. Another anticipated innovation coming for Tesla is its autonomous robots. Tesla's intention to extend its expertise from artificial intelligence to autonomous robots is not a secret at all. In fact, Tesla just introduced its humanoid robots, Optimus, to the public a year ago. According to the automaker, the robot can handle boring tasks, and a prototype is out later this year. The Optimus project may seem somewhat theoretical at the moment, but it's a great foundation for Tesla to continuously create more advanced innovations. Musk said in the company's latest earnings call that Optimus will ultimately be worth more than the car business, and more than full self-driving. But the question is, what effect will that have on Tesla's valuation? It is obvious that Tesla is one of the most controversial companies with outstanding valuations in the market. Being the lead in the US EV industry, investors and potential investors are keeping a close eye on the company's valuation. At the time, Tesla is worth more than the next 14 automakers combined, which further explains the company's dominance in the industry. Its price-to-sales ratio of 19 is somewhat similar in valuation to a software company, and that's why most of its fans claim that Tesla is going to be a much bigger service than just a car company. Although we can't deny that some investors do think that Tesla is currently overvalued. Looking historically, some analysis once said that Apple was overvalued when it was a $60 billion business back in 2006. A year later, it revealed the first iPhone, and now the company is one of the biggest globally with a $2.6 trillion empire. Likewise, Fortune magazine once read that Amazon trades at a valuation that far exceeds any semblance of reality, and this was at a time when Amazon was at around $76 billion, making a huge gap from its current $1.4 trillion valuation. This is not to say that Tesla is on the range of valuation of these companies, but there is still a possibility of it being overvalued. However, there is no disputing the fact that Tesla incorporates its technological expertise into its vehicles, and this may be the company's ticket for immeasurable success in the future. In terms of competition, there is no news that the competition in the EV industry is heating up. But with several automotive manufacturers constantly trying to produce efficient electric vehicles that will match Tesla's EV performance, well, we've got one of these right here, BYD. However, the car company released various new models, and its earnings are continuously escalating alongside its production figures, and it's still nowhere near Tesla in terms of manufacturing, volume production, models, profit, prices, and much more. While it may be believed that people buy electric vehicles just because they want one, the truth is that there's massive adoption of electric vehicles in the market, and that's because people actually want Tesla. The automaker has actually been able to build its brand with a strong foundation, and that's why most people tend to love EVs simply because of Tesla. This is one of Tesla's most significant advantages, and if it continues to put forward an impressive market performance, it will continuously dominate the EV industry. Do you believe that Tesla remains the king of the EV industry, and will the car company maintain its top position in the next few years? Let us know in the comments below. And if you'd like to know more about what Tesla's been up to in the last few days, click on this video on your screen. We'll see you there.